I think it's something important to talk about and bring an awareness to like the impact that Jerome Powell and the Fed and the 10-year Treasury has on your portfolio, even if you have nothing to do with lending market or stock market.
I'd like to go.
Go.
So I thought about like the simplest, like ELI 5, explain like I'm 5 way to do this. And I think this is the simplest way to make it like a seesaw. So I'm going to put my arm up like this is shit. How do you see it? It's like a seesaw. It's a seesaw. So on one end of the seesaw, you have valuation. And on the other end of the seesaw, you have yields. And these things try to like balance out over time. But the Fed has been putting their thumb down on the yield side, causing the valuations to go higher. And this is true in every asset class. This is real estate, stocks, crypto, et cetera. And what most recently happened is what I'm seeing is that the Fed signaled that they're going to raise the rate side, and people are front running the trade thinking that valuations are going to go lower. So like in growth stocks, like in my line of work, growth stocks like Square are down 50, 60%. Like good growth businesses are down 60% from their highs. Crypto's down, Bitcoin's down 40%, ETH down 35%. Huge pullbacks. And that's people front running this move of the seesaw. But I think what we saw today, Powell like kind of reiterated his comments saying that like, it's going to be a low rate environment, even if they do try to like take their thumb off the scale. Maybe it's like a better example is like they didn't have their thumb on the scale before. They were standing on the scale with weights in their hands, like making it so that like rates were zero. What they're going to do, they're not going to like jump off that side of the scale. They're just going to like start taking the weights out of their hands. They're still going to be standing on it. They're like at some point, like it's going to start to teeter, but it's not like we're going like this. It's not a flip. So I think what we saw today was a huge reversal. And I think like what that reversal is like guys like Steven who were front running the trade, shorting the market. That's them unwinding their short. They're like hugely profitable. Like these guys made 60% on the way down, shorting. And now they're like unwinding their short. So you see a little bit of a bounce. That doesn't necessarily mean that it's like demand back into growth stocks necessarily. It's just kind of like a bounce off of like people front running that trade.
Right. It's interesting to point out that seesaw you mentioned is kind of like a first principle in capital markets, that it's done programmatically. That was done at large scales on large amounts of capital. And so now it detaches the stock price away from the fundamentals of project. Facebook and Google are still printing cash. Bitcoin and Ethereum still have their fundamentals that are good. Rental real estate still has the fundamentals there, the general real estate market, but now they're a little detached. So the market's got to figure out where it thinks the future value will be. So I don't know. I find it fascinating that it's done programmatically and to try to take a step back and not try to overreact to it. The market's just going to try to find its equilibrium as we see, the cost of capital get a little higher for new ventures, new projects.